I'm Chris Higson, and I'm a professor in the accounting group at London Business School. In this series of podcasts, I'm going to be talking about some of the big global financial issues. But in this podcast, I'm going to give an overview of financial statements. Let's start by thinking about what we need. Financial statements are our window into the corporate world. They're the only window we have, so we have to make them work. We use financial statements to measure the profitability of companies, to figure out why companies are profitable and whether that profitability is sustainable. Equally, we use financial statements to measure the financial strength of companies. We want to know how much equity capital there is in there and how much borrowing the company is doing. So all of that gives us an accounting model. We need companies to provide a balance sheet that's complete in their assets and liabilities and is valued at current values, or more precisely, that measures the opportunity cost of those assets and liabilities. And we need an income statement that measures income comprehensively. The good news is that GAAP, that is IFRS, US GAAP, the accounting rules that determine what should go into financial statements, GAAP gets the model. GAAP has made big strides in recent years in giving us the balance sheets we need. Yes, balance sheets are irrevocably at historic cost. And it's true that they are never going to show the very valuable intangible assets that some companies have. But we can live with both of those things as long as we understand it. GAAP now makes companies tell us very clearly the so-called OCI of the business, the other comprehensive income. That is, the profits and losses that bypass the income statement altogether. And for some companies, the amount of traffic going through OCI is quite extraordinary. So again, the data is there for us to use. We must make sure we use it. I conclude that in terms of accounting model, GAAP is in pretty good shape. The problem isn't the model, it's the level of detail and disclosure that we need around that model. And this is something you cannot easily legislate for. Companies come in all shapes and sizes, and it would be impossible to legislate for the particular disclosure that you need from each different beast in the corporate jungle. So instead, you rely on top management to embrace the principle of disclosure, and of course, you rely on the auditors to police and enforce it. There are a number of areas where we're not getting the detail we want. Let's take just one example, which is segment disclosure. In any company of some size and complexity, what we'd ideally like is the accounting model for each of its main segments. And GAAP has the right idea. The GAAP principle is that companies should disclose the same segments that top management use for measuring performance internally. But we're clearly not getting that. We can look at the financial statements of some large, reputable companies, and we just cannot believe that management are monitoring internal performance at the high level of aggregation that we're seeing in segment disclosures. Clearly, the principle of segment accounting is not working in practice. Also, we have relied on demand leading supply. That is, we've relied on companies producing financial information in response to the demand from investment analysts. 10 or 15 years ago, equity analysis was a very well-funded industry. And as a result, all stakeholders were able to take a free ride on the output of investment analysts, funded frequently by the big investment banks. That golden age is now over. Many small and even medium-sized companies have very limited analyst coverage, and perhaps as a result, their financial statements are limited on disclosure and frequently quite opaque. And many companies are abandoning public equity markets altogether and going private. Americans have a particularly graphic phrase for this. They call it going dark. In the US, the loss of information when a company goes private is particularly sharp because there is no legal requirement from the SEC to publish accounts under GAAP at all if you're a private company. With hindsight, we might look back at the 20th century as the high point of public market capitalism. We have to make sure that it's not correspondingly the high point for financial disclosure and financial reporting.